Hi, my name's Brian Dodge with the JHP Group, and I'm a licensed mortgage specialist and realtor. And today I just want to talk to you about something very basic. A lot of people know, but I get this question asked every week. What is the difference between a conventional loan and an FHA loan? Or which one is right for me? Let's keep it real short and quick. Conventional loan is your bread and butter loan. If you have real good credit in the 700s, you have equity in your home, at least 20% equity in the house, or if you're going to buy a home and put at least 20% down, conventional loan's the way to go. There's no mortgage insurance. There's no extra upfront fees. It's your good, clean, vanilla loan, usually doing 30-year fix or 15-year fix, that type of thing. There are adjustables, but most people who are going conventional are going to your conventional fixed loans. FHA, what's the difference? Why do people go FHA? FHA really helps when a few things. One, if your credit is lower. If you have lower credit, FHA is much more forgiving. They don't have the hits to the rate like a conventional will when your credit gets lower. They'll also usually go to a lower minimum credit score. The other thing is FHA is much more forgiving in time or duration of any financial event. Short sales, foreclosures, bankruptcies, they require a lot less time to elapse to qualify versus a conventional loan. So FHAs are used for people who maybe can't get a conventional loan but still want to buy a house, still want to refinance, pull cash out, lower their rate, that type of thing. Okay, what's the downside of the FHA? The downside of the FHA is a couple things. One is all FHA loans have mortgage insurance. You always hear PMI. FHA, they actually call it MIP, but it's basically an insurance policy in case you foreclose. FHA is still going to get paid. And what that basically does is it equates to a percentage that is actually tacked onto your mortgage payment every month. FHA loans are typically 0.8 or 0.85% on a monthly basis. So I always tell people the easiest way is just look at it as interest rate. For example, if you have a 4% loan and you have 0.85% mortgage insurance, you're really effectively paying 4.85%. Okay, FHA loans have lower rates than conventional on paper, but once you add the mortgage insurance on top, it's actually a worse loan in most cases. The other issue with FHA is that they charge what's called an upfront mortgage insurance premium on loans. It's 1.75% in an upfront fee. So for example, a $300,000 loan at 1.75% is over $5,000 extra in fees that you're paying. So FHA loan, the rate might look good, but then when you add on the mortgage insurance at 0.85% and you add on the upfront fee, it's really not the ideal loan if you can qualify conventionally. That's why a lot of people need the FHA loans. We do millions and millions of them, but then at the same time, you can always, down the road, when you get equity or you get the credit higher, then you can refinance again out of the FHA loan. I always tell people if you have an FHA loan, you always want to look at getting out of that eventually once the credit gets better or the equity in your home gets better. I hope that clarifies for anybody. I hope it's helpful for someone out there who wasn't sure what the difference is. My email is Brian, BRIAN, at jhpgroup.net. If you have any questions or anything, I'm always happy to help. Just send me over an email. Thank you. Bye bye.